Good morning, trading world. It is September 14, 2022, 8:11 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. We are at a critical juncture in the market right now. CPI came out yesterday and did a 10-point move down inside of a 1-minute candle, as you can see right here. That's equivalent to 100 points on the S&P futures. Yesterday I had to call an audible dealing with things with my spreadsheet and Microsoft Office not working properly. A lot of stuff kind of got past my attention and I had to call an audible, but we were ready. We're not, not too far. If you always have your risk in a place where you can tolerate, you should never be far out of the game. In fact, because I was holding short positions that I have for a lengthy amount of time, it was actually a really good day for me. But even after that drop, it then continued down from there. And the single most scary thing for anyone with bullish positions going forward is the contango versus backwardation I talked about on September 6th pre-market. You can go back and get a good explanation from there in that pre-market on September 6th, where I kind of break down contango versus backwardation. But with an absolutely crushing day, volatility moved, but not enough to say all the trouble is here right now. And that's what we get from that contango versus backwardation. To read volatility futures right, forget about the near futures and go to the 35 days out. Let me bring up the vol futures right now so that we can kind of take a look at that contango versus backwardation. All right, here we are with the Vvix futures on the board. Again, forget about these near futures. Let's go to the 35 days out right here on the October 22. We're at 2770 on the Vix. Now, the next important Vix to look at is going to be the November. We're at 2782. We are still in contango, which means the trouble is still in the future. We have not seen the eye of the storm yet. So that's one thing that should be really, really concerning to anyone with bullish positions on right now. My thoughts are in the line that the line in the sand has been drawn at 391. I have 390, but I'm going to say 388. That's kind of that range. Just like when I talk about the dynamic hedging, how the market maker's move has like a draw to it. Like there's kind of like a era range or percentage around that before you actually break off. And I'm going to say the same thing about this 391, where that era, that range of error goes all the way down to maybe 388 on the SPY. And if we start to break away under that, all hell breaks loose in the markets, and there are signs that it is close to happening. Let's take a look at the dollar. All right. this is a chart of the dollar, 1 year daily on the dollar. Now the dollar seems poised to break out to new highs from right here. You can see the high at 110.78. If the dollar touches into 111, it's almost a guarantee that we're going to see new lows for this year in the S&P or in the broader markets, period. From here, let's take a look at yield. All right, this is the yield curve. There are plenty of ways to look at it, but even though this is a day behind, this is still a great way to look at it. And what I want you to pay attention to is where we are on the 2 year right now. 3.75. Now, let's take a look at the 10 year right now. 3.42. And then the 30 year, 3.51. The 2 year has taken off way above the 10 year and the 30 year, almost breaking the yield curve right now. Now, if that doesn't say recession, I don't know what does. The next thing that I want to take a look at is the Vvix, better known as the volatility of the volatility. This is what I use to see when the professionals start to reach for volatility or VIX futures. And as you can see here, this last day, for the last couple of days, we were near lows. And then all of a sudden yesterday we took off and we're at that point of almost breaking out. The 110 level on the Vvix is a scary place. That's when you know things are super, super serious. So we want to keep an eye on that. And I'm telling you, when it comes to the VIX, VIX can be trading very low at one point, and it doesn't take very long, just the snap of a finger, and VIX could break and jump 20, 30 points. It could be nothing. It wouldn't surprise me today if we break or stay on that edge of that 390 for too long today, that we could be trading close to a 30, maybe 35 on the VIX at some point today. It can jump just that fast. So we have to keep an eye on that. But this kind of keeps me abreast of when that dynamic hedging is ready to kind of take over. Now, the last thing that I want to show you, just guess what else is piled onto this smorgasbord of risk this week. This week we have a triple witching, which means expiration for a monthly, a weekly, and a daily, all happening on Friday. I may have said that wrong. Not a monthly, but there's a triple witching going on here on Friday. And with a triple witching in play, it ups the ante on Gama risk that we're going to see this week. So let's take a look at open interest right now at the right at the money at 393, which is, it's a decent amount. It's a pretty decent amount of open interest. If we go up to 400, it's a pretty good amount of open interest for the day. But let's check out Friday. Now, if we go to those same places on Friday, just look at the amount of open interest we had. This right here tells us there is a huge amount of gamma risk at stake on Friday. So there could be a huge move that happens Friday. Now, with all the stuff that I just showed you and all the risk that we have on the table, now let me give you my opinion on how things play out this week. I kind of feel like today we trade in a range, going into Thursday with small threats to break the lows, but manage to stay in that range. However, Thursday, going into Friday overnight, we get a huge scare and break the lows a bit because of overnight news from Europe. Once the U.S. market opens on Friday, we begin to level off, consolidate, and gamma risk teamed with short covering starts a huge rally, similar in that of nature of a blow off top. This could be followed by a huge gap down. Now, this is not quite in line with the models I have prepared, but very close. In my models, I have September 26th as the breaking point or largest gap down we have seen all year. So it could be moved up by a week or two. But again, September 26th is that breaking point that I have in my earlier planned models. So with all of that, let's get to the key levels for today. Alright, here we are back with the key levels of the day. On the resistance side, we have our jack resistance at 395 to 396 area. Then we have our queen resistance 397 to the 399 area, and our king resistance 401 to the 404 area. It is going to take a lot to break through the jack resistance today. On the support side, we have our jack support at 393 to 392 area. Then we have our queen support at 391 to the 390 area. This is where we're going to watch today. And kind of keep your fingers crossed that we don't necessarily break through and below these areas today. Our king support area is 389 to the 388 area. And this is where I say if we break off and below this area, this is where all hell can break loose for the day. Now, the main thesis for today is bullish, closing above the 393.10 with a projected target high of between 394 and 403. The alternate thesis is bearish, closing below the 393.10 with a projected target low of between 393 and 388. The current major channel we are in is 397 down to 379. So that 397 or 379 is kind of like that last level of defense below here, where we could kind of turn around and really where things really break apart, and you'll see Vvix shoot up to the mid 30s and possible the low 40s. Now the next major channel below is 379 down to 364. Now there is an inordinate amount of order flow above to fight through, and a lot of drivers that want to see the market down. If we fall below 391, 388, we will see just how angry volatility can get. But I think we barely managed to hold the line today. Let's get into the scenarios of the day. All right, our first scenario and most probable is going to be a range day structure. I still have expansive, but I want to say a range day structure. And we could have an initial drop, find support, and chop back and forth for a while until we gain enough strength to start chopping higher and higher later in the day. So it's going to be a lot of chop back and forth, but it's going to be sideways to up in the latter part of the day. So that's our range day structure. And we know it to be range day is because we cross the previous close at least twice. And I mean significant closes or clear closes above and below the previous close. Let's bring up the next scenario. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either that queen or king support before spending the same energy we used going down to go back up the second half of the day. So this is our rounded reversal day type structure. We also have a vice versa alert on this, which could see us do something like this, where we get a continued up at the open and then find our midday chop either around that jack or queen resistance area, and then see the second half of the day go down with the same amount of force we went up with the first part of the day. So that's our vice versa alert on the rounded reversal day type structure. This could very well take place. This could be the main day structure for the day because it's so close in probabilities, the toss up between the range day and the rounded reversal day. It is very, very close today. All right, the last day type structure we have is going to be our trend day down. With the trend day down, we would have to gap. We would have to have some price action take us below the previous close represented by the blue line, giving us that gap down. And then we would have a pop back toward that previous close after the cash open. That previous close, we find resistance either on or before it. And then we have a downtrend start in our golden window, which was usually the best time to trade. And then we find our midday chop either around our queen or king support area. Later in the day, we come out with a head fake looking to continue that downtrend, but at some point reverse and start kind of a pop or small rally into the close. Now, as I put this together, things are changing. It is quite possible we could have a vice versa alert on the trend day down, which turns it into a trend day up. But it's all about how we come out at the cash open. So that vice versa alert would have us start with a gap up. That gap up would look like this. At the cash open, we would have a fade back toward the previous close represented by the blue line, and we would find support on or before it. From there, we would have a golden window that would be an uptrend. We would get into that uptrend, likely find our midday chop around the queen resistance area, and then get possibly a head fake up and kind of continue or actually have a fade going into the close. The close, how we go into the close is going to be really, really interesting today. Whether we fade going into the close or we go into the close gaining strength or rally. So those are the scenarios of the day. And just like always, it is even more important right now. As a trader, your most important job is to protect the capital that you already have. And we do that by knowing and understanding the risk that we have on in each position and manage that risk in accordance to our account size. These are days where things can really get out of hand. So open-ended positions where it has unlimited risk, this should not be in your portfolio right now. Or if it is, a very small portion. Because as you have seen yesterday, we have the potential to get really crazy. And it doesn't take long. So those are the things that I will be looking at today. Don't forget, the dollar holds the key to everything. Watch the dollar. Any breakout above that 111 area, it is definitely going to sink the market and take us into new lows or new recent lows. And along with the dollar, bonds, because yesterday no one had been paying attention to the bonds. The bonds had been sinking off the earth. And all of a sudden, people started buying bonds like it was going out of style. And that's when you know the market is scared. Dollar pushing all-time highs, people reaching for bonds, Vvix taking off. Those are all things that say, buckle up, get under your desk and hold yourself, because it's about to get really crazy. But as I said, there is a glimmer of hope, as in the way that I see the rest of the week playing out. We kind of get a few scares between here and there, but we hold it together. If not for next week, the next couple of weeks. Because again, my models have us really tanking on the 26th, or right at or before the 26th. So keep all of this in mind. If we begin to tank, we could hit the 360s, 350s pretty fast in the spot. So definitely buckle up. Make sure your risk is in check. Risk over direction. As always, wishing you a positive trading day. Hope you have a great one.